Happy Friday, traders. Okay, so it has been a pretty eventful start to October. So on the first day of October, we have had a US government shutdown. US government is still shut down. No one really has a clue when it's going to reopen. But it seems like President Trump's actually quite happy with the shutdown. He's boasting about the billions of dollars that the government is saving. There is a lot of speculation as well that this shutdown at some stage will come with some mass government layoffs. So it'll be interesting to see how the market reacts to that. But anyway, how it affects the market is that the Bureau of Labour Statistics is a government agency. That's the one that releases economic data, and specifically the non-farm payrolls data that is due, that we should have been seeing tonight in the US. And obviously the payrolls data is top tier data, and it's something the market is very focused on. For the simple fact is that the market's obviously scared that labour market's rolling over, and that is why the Fed has recently cut, and the market is expecting the Fed to cut again at the FOMC at the end of this month. So yes, it is a negative that we're not going to see this data. So the market is, flying a little bit blind, not seeing exactly where this payrolls is going to come in. Just before we leave US politics, there's also been a lot of headlines overnight that Trump is looking at giving all taxpayers a $1,000 or maybe $2,000 stimulus check paid for by the tariffs. So obviously that's going to be a bit of a sugar rush to the US economy. Obviously markets always enjoy a bit of a sugar rush. But obviously that's going to fuel demand, and it could have some inflationary implications. So let's see whether or not he follows through giving these stimulus checks. Anyway, so how are markets trading at the moment? If we look at equity markets, US equity markets, look, they don't care about this US government shutdown at all. US equities had a stellar end to September, where we saw S&P up 3.5%, NASDAQ even more, 5.5%. And the start of October, US equities continue forward and higher, and new record highs. So we've got S&P trading above 6,700. A lot of analysts recently were sort of upping their forecasts for US equities and S&P and saying potentially that 7,000 could be a target for end of year. Now that we're trading above 6,700, that's not even 300 points away now. So that's just a little over 4% for S&P. As we just said, last month S&P did 3.5%. We've got 3 months left of the year. So can it reach 7,000? I mean, the way this is going, absolutely. It is realistic. So quite unbelievable, but here we are. Equities have been